welcome to this week's episode of Hidden Wealth TV, the show that's dedicated to helping you uncover and discover your hidden wealth. I'm your host, Kristen Oakley, and I'm joined today by Chuck Oliver. He is the founder and wealth strategist of the Hidden Wealth Solution. Chuck, I am so excited to be with you today. How are you?
I am super excited to be here with you, Kristen, for sure.
I know you've put together a fabulous show for our viewers at home, and for those of you that might be newer to Chuck, Chuck is not new to this space at all. He has been on the radio show for years, and we're going to talk a little bit about that. You've also been a best-selling author twice. So share a little bit for those who might be newer to you and to the show, a little bit about your journey and your radio show and your books.
Sure. Well, my story goes back to realizing retirement planning is not easy, and understanding what it's like to lose, overpay taxes, and really seeing kind of the dynamics of the entire changing of the landscape of retirement planning really motivated me, self-motivated me to go out and self-educate myself, but at the same time to really get passionate about going out and teaching other people what they can do to seriously protect their wealth.
Absolutely. So how can people find your radio show?
HiddenWealthRadio.com.
All right. Doesn't get any easier than that, right?
No, we kept it super simple.
Wonderful. And how about your best-selling books? Do you want to touch on those as well?
You know, the books are, we're a retirement planning firm, so our focus isn't kind of like the big stock box store brokers where it's kind of accumulate. So the books are really derived from learning what you need to do, right? Helping you discover and uncover hidden wealth, which is our mantra, helps people really understand, you know, taxation, inflation, legacy. In each of the books, whether it's What to Do at 62, which I wrote on Social Security, or the 10 most expensive business mistakes business make, or my most recent book, The Baby Boomer Retirement Breakthrough, The Unfair Advantage to a Safe and Secure Retirement, that's helping people really kind of get their ducks in a row, and they're realizing they don't really have a comprehensive retirement plan.
Right, and that is what you specialize in doing for folks. So
Absolutely.
I am so excited for today's show. You've put together a fabulous show for our viewers at home. We're calling this show, the big question is, do you know the tax risk that you're traveling? So Chuck, I'm excited to start with that. That is a loaded question, I'm sure.
Well, I'm super excited to teach people, not only are there a lot of new proposed tax changes coming, but helping people understand how to actually remove money from their IRAs and 401ks without taxation has a lot of people, especially with my radio program, inquiring like, how do you do that? And I think probably one of the biggest things that are missing is a lot of people don't have a tax plan, right? And now that's becoming a big buzzword. 10 years ago when I started on the radio, or whatever that was sooner than that, people weren't even having that discussion. But now we've got different administration, different proposed changes, a tremendous amount of spending, a ton of, well, trillions, I should use the proper word, the trillions of being proposed in spending, which obviously translates then into trillions being proposed of additional taxes. And people really don't know how to maneuver or navigate that space.
Right. And I often say that with taxes, it's almost like folks are playing a game that they don't know the rules to. And I love that you are so passionate about helping folks understand the rules so that they can create greater tax efficiency throughout their full financial plan. That's what it's all about.
Well, and I love your analogy. So I ask people all the time, I'll say, you know, if I had a loan for you to consider, you'd likely have a couple common questions. One would be, what is the rate you're going to charge me? And then what would the payback terms be? And if I replied, well, we'll let you know what we decide we're going to make the rate be, right? And as far as the payback terms, that's going to be over the rest of your life. Not too many people are going to take advantage of that loan. No,
and yet we know how much the majority of Americans have most of their wealth accumulated in qualified plans, tax-deferred plans, plans that you have not paid taxes on yet, and that's why this is presenting such a problem.
And a mentor of mine years ago shared a quote I've never forgotten, and I think it really is applicable. You know, all progress begins with the truth. And the truth is, people don't know how to navigate this tax space. And unfortunately, it catches up to them. And not only does it catch up to them throughout their entire lifetime of taxes, but then they end up passing, as we'll talk about a couple stories, passing that tax on to their kids indirectly, which was never their intent.
Right, and that's always so tragic when people think they're leaving a gift for their loved ones, but inadvertently they're leaving a ticking tax time bomb, if you will.
That's exactly, and it's the exact terminology I actually use in my books.
Sure.
The ticking tax time bomb. I'll give you a good example. Scott from the great state of Arizona, he had inherited two sizable IRAs. And now Scott's already into his own required minimum distribution, so he's already in his 70s. And his tax has just exploded. And in both relatives that left him those inherited IRAs, that was never their intent.
No.
You know, their intent was obviously to do a good thing and
to
pay it
bless
forward.
him and-
And unfortunately, he's somebody that is under that, you know, unfortunate circumstance where it's like, well, what do you do to remove this unfortunate tax situation? And those are the solutions that we provide for our clients.
Well, I am so excited to get into some of those strategies today. And so my next question for you, I mean, I always say that how you make a decision in one area of your financial life does and will affect all the others. And this is really true with taxes because there's that cause and effect that can happen with folks' retirement plans, specifically regarding taxes. So share some examples so that we know what we're getting into today.
Sure. So I've sometimes referred to in my books as the torpedo of taxes. So you don't address these required minimum distributions, right? You've been you know, those of you listening, you're a strong saver. Maybe you've done too well. In fact, you know, when you really think about it, it used to be that Congress wanted to reward, you know, those that were disciplined to save for their retirement future. Now, it's almost like they're trying to penalize.
You're getting penalized for it, right?
For doing that. So here's Scott is one example of inherited RMDs that he had never projected his tax bracket changing or his tax liability changing. Never would have assumed that to happen until it took place. You think of people that don't address these required minimum distributions, and now they're trying to decide, do I do a Roth conversion? When do I elect my Social Security? And one of the biggest I talk about are people that still have the choice of making an election with a pension. And so what ends up happening is you sometimes can create a lifetime tax to your Social Security because of the choices you did or didn't make around your IRAs and the impact of these required minimum distributions.
Right, and a lot of folks are surprised by that because when Social Security was first created, it was never meant to be taxed. Well, fast forward, now you could have up to 85% of your benefit being taxed.
Yeah, and a lot of people that trigger that traditional pension versus if they have a lump sum choice, at least with the lump sum, they can have a strategy to Roth convert that in the appropriate circumstances. But you lock that thing in, you not only lock in your Social Security being taxed indefinitely, but you end up locking in your spouse's tax, especially if it's a survivor pension benefit. And so those are where now somebody is a good example on a Roth conversion. They didn't know what they didn't know, and now all of a sudden they trigger an indirect tax to their Medicare under their Medicare Part B and D, and now they end up having an extra 5, 6, 8, 10,000 of Social Security tax. They end up having another 3 to 6,000 of Medicare tax, and that's on top of their income tax, and then they become what I call, which we all want to avoid, is becoming the perfect taxpayer. And that's really unfortunate, but that's what a lot of people that don't know that tax risk road that they're traveling down.
Yeah, so how do you define the perfect taxpayer? Because we don't want to be that. So how do you define that?
Well, you really want to be a low tax or a no tax retiree. And the way to do that is really to have a tax plan. Now, a lot of people have a tax preparer. And you know, there was a really good article, I have to give credit where credit's due, I think it was out of Morningstar, and the person used an analogy of comparing, do you have a tax archaeologist or do you have a tax architect?
Oh, I really like
that. And so the tax archaeologist is studying artifacts and history, not looking forward, to see what pitfalls can be avoided. And of course, the tax architect is a innovator, a planner, somebody that can actually see and go before where somebody hasn't been to say, look, these are pitfalls that you can't avoid.
Right. Absolutely, and I know that's what you love and are so passionate about doing for folks.
Absolutely.
Well, I know we are going to have to take a quick commercial break, but Chuck, one of the things that you offer to people is a complimentary personal wealth blueprint. And before we go to commercial, I would love for you to share a little bit more about what that is and how our viewers can take advantage of it.
Absolutely. So our personal wealth blueprint is helping people discover and uncover their hidden wealth, just as Kristen had said. And in that blueprint, we're identifying taxation, inflation, legacy. But what a lot of people are missing is having a true comprehensive plan. And this, if you're really serious, you've been a strong saver, and you want to avoid kind of that title of being the perfect taxpayer, take advantage of this opportunity, because a lot of people don't realize that the proposed changes, which we'll talk about when we come back from the break, are really going to catch up to people. In fact, I'm super excited. I'm excited to teach them what's being proposed, because a lot of people are going to be alarmed by that, and I'm really excited to teach them what they can do as far as doing something about it.
Wonderful. We have so much more to get into, but if you're watching and you're going, wow, there is a lot to know, and you want to be in the know to know how you can uncover and discover your hidden wealth, we encourage you, take advantage of this opportunity, pick up the phone, call that number on the bottom of your screen, 844-837-3652. Don't worry, you won't interrupt the show, but someone will be able to answer that call and get you connected to have your complimentary personal wealth blueprint appointment with Chuck and the team at Hidden Wealth Solution. Also, you're welcome to take out your smartphone. Simply scan that QR code in the bottom right-hand corner of your screen. That will take you over to a landing page, ask you a few simple questions, and then you'll be reached out to schedule your complimentary meeting that way as well. As Chuck said, he has a lot more to share with you, so stay with us. We'll be back right after this.
As a good saver, you've been putting away money during your working years. Studies find that the biggest fear of retirees is running out of money. Market volatility isn't just the downward movement of stock prices, it's the size and frequency of change. The more dramatic the ups and downs, the higher the volatility. This can put savers who are newly retired or a few years away from being retired at greater risk. Today's generation of retirees is not receiving traditional pensions as our parents or grandparents did. Instead, we have retirement accounts such as 401ks or 403bs. These accounts typically expose your money to market risk. The last thing you want right before retirement is to lose a portion of the money you need for income. But how do you turn these accounts into a retirement income? Is it safe to keep all your retirement money sitting in the stock market? The last thing you want is to lose a portion of the money you need for income due to market loss. By working with a financial professional, you can learn how to turn a portion of your savings into an income stream for life and income for the life of your spouse if you're married. We all have moments in our lives when we wish we had taken action sooner. Don't let procrastination reign on your retirement parade. Act now before it's too late. Please call our office to set up your no-cost, no-obligation retirement income review today.
Welcome back to Hidden Wealth TV. I'm your host, Kristen Oakley, here with Chuck Oliver. He is the founder and wealth strategist at Hidden Wealth Solution. We are all about helping you at home discover and uncover your hidden wealth. And so, Chuck, I know before the break, gosh, we got into a big discussion all about taxes. I know you were so passionate about helping folks understand what they need to know about their tax situation and the implications that that has for them and their overall retirement plan. So my next question, I know that you like to talk about the 5 ways that taxes can increase in retirement. And so can you share with our viewers what those 5 ways are so that they can be prepared for them?
Absolutely. One we talked about in the first part of the program was Scott, right? Your tax bracket changes, right? So Scott was not, here's somebody that had inherited IRAs. He was not expecting these inherited IRAs. In fact, almost $500,000 of inherited IRAs. And that's causing him obviously to pay higher tax. So one of the ways is just your tax bracket changes. A big one I think about, and unfortunately we're seeing more and more of that with our aging society, is what we call the widow tax penalty. And your tax bracket changes. And I think of a client by the name of Jean that we work with, and Jean literally overnight went from a 24% tax bracket to a 32% tax bracket, just simply from going from a joint filer to a single filer. And she was not anywhere
prepared for
yeah,
that.
she was not prepared, let's say it that way.
Well, and that's why we often call it the widow's penalty, because it's bad enough that you've just lost your spouse, but now you're jacked up in a completely different and higher tax bracket, and that's the problem.
The second way is the brackets change on you. So, you think of the Tax Cut and Jobs Act, which brought tax relief to a lot of people.
Right.
And now, right, we have to look at those tax brackets changing back for you and I when the Tax Cut and Jobs Act sunsets, right, which it's scheduled, at least it's projected to be scheduled to sunset at the end of 2025 in a few years. So that's a big one that people really, sadly, they're just not taking advantage of, right?
Right.
Taxes are on sale in that second of the 5, and people usually jump on sales. This is one that we're finding people are not taking full advantage of the sale.
Because they're not aware of what the implications are.
Right. It's like we like to say, you can't be aware of what you've not been made aware of. And unfortunately, as we'll get into it, there's a lot of things, unfortunately, they're going to want to become aware of. The third is the elimination of deductions. And this is one that's going to sunset with the Tax Cut and Jobs Act as well. So when you think about deductions, like, for example, our standard deduction. That deduction was basically doubled under the Trump Tax Cut and Jobs Act, or the Trump tax cuts as they're referred to. And that is one that a lot of people, I think of a client that had sent me a spreadsheet that we're helping with strategic Roth conversion, And he just blanked on the fact that, you know what, really in 2026, I'm not going to have that high of a deduction. So the changing of the deductions. The fourth, which is key, is the change of assets being taxed. And you mentioned it, bringing up the topic of Social Security. Social Security, which under FDR was promised to never be taxed, right? And then in 1983, it was passed going into 84 that 50% of the benefit could be taxed. And then in 1993, they push it up to 85% of your Social Security being taxed. So the way changes to how assets can be taxed, unfortunately, is one.
For sure.
And the biggest, the one that I hope our listeners are really listening to, is the proposed changes of new taxes. And new taxes are coming. And I'll give you an example of one in particular that has a lot of people very concerned. But these should have, many of you listening at home, if you don't have a tax plan around this, you really want to really think and kind of lean in and listen, because these are proposed changes that are rather frightening. And I'll give you the first one. So one is a unlimited age required minimum distribution. So if you were the ideal saver to avoid becoming the perfect taxpayer, as we joked about earlier, then in that particular case, and I love this terminology, a limited congressional mandated amount, which what is that number, right? But Congress is supposedly going to come up with this number. And if it's over that threshold, regardless of your age, you have to take out 50% of what exceeded that amount every year, regardless of your job status, regardless of your marital status. It doesn't make a difference.
Right.
Second one that's a big proposed change, and these are things that are actually being talked about in Washington as we speak, is the one where you could have done such a good job of saving that you're going to be restricted from putting any more money into a tax-deferred account or a tax-free account like a Roth IRA. So IRAs and Roth IRAs will have caps. But the last one, Kristen, and this is the one I think really should have viewers listen up to this, the proposal to eliminate the ability to do a Roth conversion. And it's going to be based, supposedly being talked about on a specific amount of income threshold. But a lot of people forget very quickly that it used to be you couldn't Roth convert if you had a certain income limit till the Obama administration came in. And of all the administrations, they lifted that. And if you remember, they gave us 2 years to spread the tax. And this is what Congress does, right? If they need tax, they create the government giveth and the government giveth away. Take it away strategy, right? So those are some the big five that a lot of people are not prepared for. And this is the number one thing that we get as a request from clients is, what can I do to save tax?
Well, I know those of you that are listening and watching right now are going, yes, what can I do to save tax? So they are raising their hand, they want your help. What can they do to get a hold of that?
Well, as I said, all progress begins with the truth. And so we created a very unique calculator that we have clients, they're able to access this. And what this calculator does, it's a retirement tax calculator. And it enables them to see the retirement tax risk road they're traveling, right? So it's going to show them what the cumulative tax liability is going to be from their required minimum distributions. It's also going to show what a lot of people forget about is once they take their required distribution, they reinvest it somewhere, which typically they reinvest it somewhere where it gets taxed again. And then lastly, what is that tax going to be passed on, let's say, to loved ones, children, grandchildren, great-grandchildren? And it'll show, and this is sad, but this is likely, for the listener, this is probably the best tax situation they're going to be in if some of these other proposals obviously are enacted. And so that would be the least amount of tax. So I think the first step would be just become familiar with what you're exposed to, because that way, as you said earlier, taxes are cause and effect. So one decision today is going to have a lasting impact of your taxes tomorrow. But get that calculator and learn what you can do from that calculator as far as seeing what the exposure is. That's going to be the first step. And we will talk about a few solutions as we get there.
Absolutely. Well, I know we're going to cut to a commercial break, but just represents how they can access that retirement tax calculator and then what they're going to get when they call today for that personal wealth blueprint.
Sure. So if you're somebody listening and you're saying, you know what, I think I may be on that tax risk road that I'm not going to be that familiar with or that comfortable with, go to retirementtaxcalculator.com. We made it actually very simple, retirementtaxcalculator.com. And that way you can kind of see the road you're actually traveling so that you now can learn what you can do to potentially do something about it.
Wonderful. Well, Chuck, thank you so much. To our viewers at home, we are going to take a quick commercial break, but again, that website to visit is retirementtaxcalculator.com, and we would encourage you to pick up the phone and make this important phone call today so that you can have Chuck be able to meet with you, look at your own personal financial situation, and help you eliminate a lot of these tax risks from your retirement plan. Simply call the number on the bottom of your screen, 844-837-3652, or you can scan that QR code and that will get you connected for your complimentary meeting with him as well to get your own personal wealth blueprint. More on today's episode of Hidden Wealth TV right after this.
The work never seems to end until the day it finally does. After nearly a lifetime on the job, you should be rewarded for all the time you spent working. Whether that's crossing off items on your bucket list, learning a new passion, or rekindling the love of an old one. After all, life isn't over when you stop working. It's the start of an all-new chapter, the one where you're the writer and you get to choose how your story will go. A way to achieve that is by having a clear financial plan to sustain your golden years. The biggest fear most retirees have is if they'll have enough money to maintain the lifestyle they've always enjoyed. Having a plan to help protect you against the curveballs life often throws will help to maintain your lifestyle. Call today to get your free written financial plan so you may live every day to the fullest and enjoy the retirement of your dreams.
Welcome back to Hidden Wealth TV. I'm your host, Kristen Oakley, and I'm joined by Chuck Oliver. He is the founder and wealth strategist at Hidden Wealth Solution. And my gosh, what a great conversation we are having today as you are helping folks understand this potential tax risk road that they're traveling, that a lot of people might not even be aware that they are traveling. So you had mentioned about getting money out of IRAs, and you have a way of helping people do that totally tax-free. I cannot wait to hear this strategy, and I know you're excited to hear it at home as well. So yeah, share that with us.
Sure, there's a couple ways to do that. In fact, it's interesting. The number one thing, and I've written about this in my books, the key three I call them actually, tax elimination, income maximization, and lifestyle and legacy preservation, all relate to taxes. And the very thing that ends up costing people the most in the erosion of their wealth, right, is the very thing that gets actually the least amount of attention, and that's tax. So when I think people are facing like, well, how do I get this money out? And many of them are fearful from even attempting to get it out.
Sure.
Either they got hit by, the tax torpedoes that we talked about earlier. All of a sudden, I think of the client that we had met with, and he said, well, Chuck, I thought I knew what I was doing. This is kind of one of those do-it-yourself-at-home things that you really don't want to do it yourself at home.
Yeah, don't try this at home.
Yeah, don't try this at home.
Right.
He said, so I got a hold of my broker. My broker sold positions to generate the tax, right, from my conversion tax, that then created capital gain tax, both short and long term, and then that was to be used to untax my IRA. So I just got tax attacked.
Right.
And so one of the strategies, and we can talk about it, there's actually a couple. One in particular is a qualified charitable distribution. So if you're, and there's some
otherwise
limits.
known as a QCD, right?
QCD,
There's a ton of acronyms in this business, so we got to make sure we're clear.
We've had
right?
clients say, Chuck, you guys use more acronyms than the military.
We didn't make them up. Right?
QCD. And then some of my favorite, the ones that the Congress makes up, right? The Inflation Reduction Act, right? It's like, oh, okay.
Yeah.
So the QCD, you have to be 70 and a half or older. The limit is $100,000.
For the year, right?
For the year, yeah. Each year you can actually do that. And obviously the purpose of that isn't to just save tax. The predominant purpose is you're philanthropic and you obviously want to make a bigger difference.
Yep.
But that's just an example that a lot of people don't realize, right?
It's
They don't know.
available to them.
Yeah,
right.
it's available. And again, you have to be a certain age, you have a certain limit of what you can do per year, and it has to be done by a certain time frame. And I think because there's all these little nuances, and unfortunately around taxes, there's a lot of nuances, it just kind of paralyzes people, right? They just don't want to take action because it's easier to almost feel powerless and feel kind of stuck.
But again, so what that does is it allows them to take their RMD, for example, that another acronym, right? The required minimum distribution, and take it immediately over to a QCD. So you're making that donation to charity, but then you're also not being taxed on that money.
Exactly, and you're driving down the balance of that IRA. And one of the things I've read about in my books is RMD has a couple, that acronym actually has a couple meanings. One is required minimum distribution.
Right.
What we're finding, and again for the viewers, if you're a strong saver in IRA and 401k, really an RMD to you really means retirement mass destruction. And we see these RMDs really catch up to people and catch up in a big way. And then, like we talked about earlier, then they leave an unintended consequence, right, of inherited RMD
Right,
to
to
their
those that
family.
they're passing the money to, yeah.
One of my favorites, which has been around in the tax code since 1913, which is the inception of our federal tax, is the ability to use energy deductions. And a lot of people are not familiar with what I refer to EIA, Energy Independence Accounts. And some, with this green, this kind of green initiative, right, as far as electric vehicle deductions around alternative uses of energy.
Solar panels,
solar, all of those
right?
things.
Yep.
This one in particular provides, and we have an entire tax team, and I know we've not got a chance to talk about that, but actually have an entire tax team that is versed in not just telling somebody what they owe, but actually teaching them how much less, telling them what they owe, but teaching them how much less they have to pay.
Right.
And this is a key area where arguably they would say, and this is a lot of CPA firms that we have access to that are on our team, that they would say, Chuck, arguably this is the greatest tax deduction, and I'll show you how it works, I'll talk to you about how it works in the entire tax code. So it's 100% deduction.
Okay.
Typically, you're only going to get about 75% of that deduction in the first year. But a lot of people didn't think about kind of taking two different things and creating something monumental from it. And that was a deduction that will help you lower your taxes. But they never really thought about how do you use that to convert your IRAs to Roth IRAs. So I'll give you a great example. I think of clients of ours from Chicago. And John and Kate are great clients, and they were really working hard at getting all of their IRAs out of the system, as we call it, right? In other words, insulating your income from the IRS and Uncle Sam.
Yep.
And what they did is they said, Chuck, I think we've got this down, and we really appreciate the referral. So what we were able to show them is that they could use $200,000. They were using savings, just discretionary savings, maybe some non-performing assets. And that created, at a 75% deduction, a $150,000 tax deduction.
Wow.
And this is not a tax credit. Some people confuse it with a tax credit, but this is an above-the-line deduction. So it's before factoring in tax to your Social Security, your Medicare, et cetera. That enabled them to go over to their IRA, and this is the rest of Kate's IRA, and convert it from IRA to Roth of that $150,000, representing 75% of $200,000, completely tax-free.
Wow.
They owed zero tax on that. Now, what's really interesting is that deduction can be recycled. So as that money, not just used for deduction, comes back in returns, it actually comes back up to the original investment tax-free.
Wow.
So what I want listeners to understand, you can recycle that deduction and use that for ongoing Roth conversion to where eventually you can eliminate yourself from the tax system.
Wow, I am so glad that people have someone like you that can really help them navigate, because there are so many complexities to all of this.
It is complex. I think of some of the clients that have said, well, the one son was a CPA. The other said, I've been with the same person for 30 years.
Right.
They've never heard of this. How does this work?
Right.
And it's becoming aware of what you were never aware of.
Well, thank you so much for being here today, for sharing all this valuable information. And for those of you that are watching at home, we encourage you, if you would like Chuck's eye on your financial situation and the team at Hidden Wealth Solution to be able to help you figure out how you can pay less to the IRS, call that number on the bottom of your screen, 844-837-3652. We appreciate you watching. We look forward to being back with you next week.